This is Matthew Cratter from Trader University, and today I want to talk about a number of bearish candlestick patterns that I see forming, especially what's called the hanging man. If you're interested in learning how to make money in both bull and bear markets, or you just want to see what I'm trading or investing in, be sure to hit that subscribe button. So on Monday, we talked about how we're entering the seasonally weakest time of the year. September is when you have the worst average returns for the S&P 500. As you can see from this chart, September really standing out as a nasty month. People always associate October as being a nasty month because we got the 1929 and the 1987 crashes. But September is known for lots of crises and stock market problems as well. So I just wanted to show you an interesting candlestick pattern that I've noticed across a couple stocks. And we're getting a sort of a textbook version of it in Peloton. Yesterday we got it, PTON. This is called the hanging man. We can see it. We can see it right here. It's this last candlestick right here, and it looks it's a little bit morbid or gruesome. The head is up here and the body's down here. This is why it's traditionally called the hanging man. Now, in order to have a hanging man, you need to have an uptrend. If this were to occur at the end of a downtrend, it would be more like something called a hammer candlestick. But if the stock's been going up for a while, as Peloton has, and you get one of these, it's a bearish reversal signal, and as such, something to keep an eye on. And the basic form is this: you gap up from the previous day, which we can see right here. You explore territory, you go all the way down. The sellers begin to take control. So what looks like a very positive gap up all of a sudden becomes more negative. The sellers take control, and then they manage to rally back up, but not all the way back up. The head of this candlestick, of this hanging man, the head can be either red or green. Red is normally a little bit more bearish, simply because it shows that the stock closed below its open. And so this is basically the sign that after you've had a big uptrend, that the bears have begun to re-exert control, and they're able to do it by driving the stock down, even though it gapped up. The bulls seem to recover by the end of the day, but the thought is that everyone's confidence is shaken. Now, the real way that a hanging man gets activated is when you trade below the low of that day, which would be the bottom of this candlestick. If that happens, that can be a sign to take profits on a trade, or even to go short if you're willing to take the extra risk. So for Peloton, that low yesterday was 84.25. We're currently trading at 88, so we're not there yet, but the market is looking weak today. We got a similar formation in the QQQs, which is the NASDAQ 100 index, all the biggest tech stocks. This one is not quite as textbook, but I would still classify it as a hanging man. We got that formed yesterday. The low of this one is 296.89. And so we're just right now in the pre-market, we're 298.27. We could certainly trade below this today. That would be a possible reversal signal. Also seen it on a couple of the chip stocks like NVDA. This one has a little bit bigger red head for the hanging man, but we can see that it still has that long tail. And right now we are right in the pre-market, we were trading right at those lows. 556 would be the low. Right now we're at 557.09. So very close to having that break. Again, these are not real predictions. They don't have to happen this way, but it can be a sign that if they do reverse, that you might want to take some profits. You might want to tighten up your stocks, your stops, your stop loss levels, etc. Especially when you're seeing it across a bunch of tech stocks, as I am. They can be a warning sign that maybe you should lighten up your whole book. Finally, I want to talk about Tesla. Tesla, you can see that this hanging man is not really textbook, but very similar to what we saw. We already had kind of what looked like a false breakout, what looks now in retrospect like a false breakout on Monday, a little small reversal candle on Tuesday, and then not a textbook hanging man, but you can see that it's something very similar. The stock was able to rally back up off its lows yesterday, but right now we're trading very close to the lows. We're trading at 409.76, and those lows are at 405.12. I do hold Tesla as a long-term investment, so I don't trade around reversals like this. But if it is a shorter-term trade for you, definitely something to keep an eye on. Things can get very ugly, as we said, especially in September. If you enjoy analyzing charts like this, learning about different candlesticks, learning about reversal patterns and topping patterns and bottoming patterns, you might enjoy my course on price action trading, where I talk about things like the hanging man candlestick, pin bars, hammers, shooting stars, 3 black crows, 3 white soldiers. These all have very interesting and kind of cool poetic names, and I've found them very useful over time as well, especially when you combine them with moving average analysis. If you join Trader University, you don't only get access to the price action trading course, but you get access to all of my courses, especially including my new course on trading momentum stocks called Momentum Stock Secrets, in which I look at some indicators that I've never shared before. You get access to my day trading course, swing trading course, my list of favorite momentum stocks, as well as my beginner's course, sort of the flagship course, Learn to Trade Stocks Like a Pro. So if this is something that interests you, you can just click on the link in the description notes below. It'll take you to this page, and you can click on any of these black blocks to see the curriculum, to see the list of lectures. And if you're interested, you scroll down here, click Get It Now. Now I want to give you a special coupon. Normally access to Trader University Premium and all 13 courses is just $125 for 30 days access. But with the coupon I'm going to give you, if you just scroll down here and click Have a Coupon Code, type YT99, click Update, that'll take $26 off. So instead of $125, it'll just be $99 for 30 days access. There are no long-term contracts or anything like that. You can cancel at any time, watch all the courses, take notes, and then cancel before 30 days is up. Or you can stay subscribed, and you'll get to see the new courses that I try to add every single month. If you found this video helpful, be sure to hit that subscribe and like button. Let me know your questions and comments in the comment section below. And thanks a lot for listening. I'll see you in the next video.